and gentlemen, boys and girls. What what a market, just in general, but more particularly today. It's been a wild time. I'm super excited to just chat about it with you. And as always, I've got your little chat in the bottom corner here. So ask away about any stocks that you want. That's the ultimate goal here. But you guys have to listen to me rant a little bit first, and because it's my show and I can do whatever I want here. So we go to this cues. Let's take a quick look at the SPY, and I just want to calm everyone down a bit. I think that's like I should have branded myself like the market psychologist or something, because everyone's just all up in arms about, is this the end of the bull market? I hear some people even saying, is this a bubble still? Even though a lot of stocks, most stocks are down like 30%, 40% from their highs. And I just have everyone zoom out. We'll take a look at this and we'll say we are at the same price we were in end of September, right? It's the end of November. We've done 2 months or 20% roughly of the year doing nothing. And we're in a bubble. That seems weird to me. And then even more so, this is the monthly chart. Yes, we were up 6 months in a row. That's pretty wild. And we're down this month. I've heard people use the word crash for where the market has done over the last couple days. This doesn't look like a crash to me. This just looks like a little, nothing month, little sideways month there, and could be more of it, right? So if you're ending up having a real bad time, if you're ending up like getting killed in this kind of sideways chop fest, this nothing of a market, if your portfolio is down a whole lot during that period of time, I think you have to reevaluate a little bit. You got to take a look and say, well, what is it that I'm actually doing here? Am I really diversified? Do I really have a trading strategy at all? Or as us nerds call it, is it just leverage beta, which just means as the market goes up, your portfolio goes up a lot. And as the market goes down, your portfolio goes down a lot. Because I see a lot of people just talking about a crash and nothing, nothing has happened. I mean, this is the end of September, and that's the price we are right now. We had a kind of little up month, but not much. Yes, last month, and we were down a little bit this month. So 6 months up in a row. I think it's perfectly normal and perfectly acceptable and perfectly okay if the market just goes sideways for this month. I think that's totally cool. Right? It could go sideways for like 3 months. I think that'd be fine. So just a lot of people are worked up right now. That's basically, I guess, the end of this rant. And don't be, you know. I think overall, what we're seeing is actually a lot of rotation under the hood. Go back into the daily chart and let's go XLK. And this is technology. So the S&P 500 is split up into 11 different sectors, and healthcare and um, finance and technology and right all these names. XLK is the tech sector part of it, and that tech sector part of it is down a little bit from all-time highs. This kind of looks a lot like the SPY, and it looks a lot like the Qs, down almost 8% in technology. Right? The SPY is only down 3%. So what does that mean? So if part of the SPY is down 8-9%, and the entire SPY is down 3%, wrong button there, Mike. There you go. Yeah, the entire market's down 3%. What does that mean? It means there's other sectors that are holding us up. It means there's some sectors that are going lower, and then there's other sectors that are holding us up pretty good. And that's the rotation that I think we need to pay attention to as traders. XLV, for example, this is healthcare. Healthcare has been absolutely ripping. Nice little base right here, broke out of it, continued, put in another nice little base, broke out, and continued. Right, so Eli Lilly, look at this chart. This is insanity in Eli Lilly. Johnson & Johnson, doing crazy. Oscar, full disclosure, I own a bunch of this, and it's just gapped up like 30% today. So there's some sectors that are having a very hard time, and there's some sectors that are doing just fine. So if you're looking at this market and you're thinking crash, or you're thinking your portfolio is down a lot, well, then you're not diversified. You are just leveraged the hell up, which doesn't necessarily mean you're using margin or you're necessarily using leverage. It could just mean that you are invested in stuff that's just going to move with the market, but a lot more. And I'm thinking quantum computers could be one of those. I'm thinking space things. I'm thinking robots. I'm thinking, right? Are these actual great companies, or were they just ripping because animal spirits were insane? Right? That's so it's a good time, especially on this holiday week, to take a deep breath and right zoom out and say, hey, you know, am I actually trading with some sort of system that makes sense, or am I just buying the most crazy stuff out there and it's working? Before I get to it, again, I'll get to all the questions. I'll get to them in order. Someone says, "Who am I?" I should probably do that. I should probably introduce myself. My name is Michael Nauss. I'm a chartered market technician. I've been in the market in hedge funds and institutions and crypto stuff for 20 years. I'm an old man. And I am a quant and a technician. So a lot of the decisions I make are purely quantitative, and then I apply charts to those as well. So KH, let's just start going down the list. Again, I will get to everyone. KH is not a ticker, so we will avoid that one. CURI. Curiosity Stream. So this one's interesting. You can see I already have it marked up, which makes me think that quite a bit that already has happened. Right? This I already asked this question before. So the idea behind what I'm seeing here, the main thing is the positive reaction to what would be negative earnings. Now, there, I'm not one that I follow the news too much, but I think how the market reacts to news is hugely important and can provide a lot of alpha. If this is what freaked everybody out, if something can happen like Nvidia, where it reported good or even great numbers by some respects, the and completely fall apart, then that is a warning sign. That is something to be slightly worried about. Maybe not hugely worried about, but slightly worried about. So if that can take place, and you should pay attention to that, you should pay attention to the reverse of that. So CURI, it missed here. It beat on revenue, but then it missed kind of horribly on earnings. Right? 118% miss on earnings. I don't care about that. I just care about the market's overall reaction to it. And the reaction to that name is positive. So it actually gapped up. This usually means they probably said something good on the call, or right. I don't know. It's a lot of things you can do. This is why looking at the actual top line numbers doesn't really give you a lot of information, because yes, they could have said, yeah, that was a one time accounting issue that we've now written off and everything's fine. Main thing I would look at is how much it's respecting this trend line. And I'm not one that I think trend lines have any magic or anything to them, but every now and then you get stocks that respect them amazingly. And this one, I drew this one in a while ago because I don't know what this company is and I've never traded it before. So that means one of you guys probably asked me about it. And it's hit that now twice and three times and four times. And now it's trying to deal with it. So this would make my decision, if I had some sort of a bias on this stock or some reason that I liked it, it would make my decision very simple for this trade. I would just go through and say, okay, if we break above this trend line, which is sitting around 480, you could say right now, if we break above that, then you can take I would take the trade. And then your worst case stop has to be around this $4 zone where it's bounced off one, two, three times. Again, there's no magic here, but to me, just that represents is there is some institution, some power that be, somebody more important than us that is using that particular zone, that $4, and they're saying that's my line in the sand. I'm buying it there. And if that person leaves for whatever reason, they're done filling their order. Maybe they were short covering. Who knows? Who knows what it could be? It could literally be anything. Then you should probably go with them. A lot of what we're doing is we're just trying to follow the quote unquote smart money, right? The big guys out there. So that to me is a pretty simple way to dissect that trade. Is if it's above, great. If it gets above that trend line, great. If it loses $4, or even if you want to do the funny number, you could say, hey, back under 420, it's probably time to go. But it's a nice look. It's things that are holding on well, especially like really junky speculative names. And I don't know anything about this company, but I know uh, beginning of last year was 46 cents and now it's up 10x. So generally it's a pretty speculative junky name if it's up 10x. If it's holding on, I think that's a great thing. SNDK. Geez, yeah. There's not a lot of analysis to do on something like this. It's just up in a straight line. Right. I'll be one to tell you when technical analysis I don't think has any objective. The main tenets of what we're trying to look at with technical analysis are trend, right? What is the trend of the underlying instrument? That is obviously insanely important. So it's trend, and then it's where are buyers and sellers interacting? That's about it. Again, I'm not going to be, well, I'm not the guy who's always standing on the totem and saying, hey, this is telling us something mystical or something amazing. That's what we're looking at when we're looking at charts and technical analysis. What's the trend? And are there areas in the past in which buyers and sellers thought it was a fair price to transact? Right? And in SNDK, you don't need to be a CMT to nail what this particular trend is. This thing has just been ripping. It's been ripping higher. So the trend is obviously higher, right? The trend looks like it's going to continue to be higher. Problem is that step 2 is that we don't really know where that buyers and sellers believe to be any kind of a fair price, because it's just been ripping. There's no huge advantage to using technical analysis on this particular stock because the stock's just ripping. So, right now, I think the most important price to watch is really just this low, the low of this candle. Hammer candles become important to us as technicians because there's this old adage in trading in which amateurs open the market and professionals close it, which essentially just means, and the reason that I think it holds true is, as someone who worked in the hedge fund world for 10 years, they're not sitting there at 9:30 a.m. hitting buttons to take trades. They're looking for zones or areas in which to transact, and they're generally doing that in the latter half of the day because there's more predictable liquidity. There's not more absolutely liquidity. There's predictable liquidity in the last half of the day. So sometimes you will get these kind of late day reversals where you have, right, a big push down and then a rip up after that. And so that becomes an area that, again, somebody bigger than us, more important than us, looked for an area to transact. And that's the only thing that I see here on SNDK. Other than that, if you got it, great. Slap on some sort of trailing stop. So when the party comes to an end, which it will at some point, you have an out. But until then, right, make hay of the sunshine. We got to remember, we are in a wild bull market. And it's important when we're in a wild bull market that there's 2 very important skills to have in wild bull markets and stocks that look like this in particular. One, you have to be able to have a plan to stay in the trade as long as it possibly can. And you'll never nail the top, and it just won't happen. So just get that out of your head. But if you just sold it because it was up a lot, there's a lot of people that do that. They look at their account and they say, wow, I'm up a lot on this company, I'm going to sell. If you're doing that, then you're never going to get the huge winner. And when I look back at a lot of the best years and the best trades in my account, a lot of them are just because I got real lucky and I nailed one really, really well, right? Just I got one trade that just kind of ripped. Right? I don't know. I remember an example. Like I remember this one way back here. I see I already have it marked up. It was almost a year maker. I bought ELF in the 30s. This thing ripped up. I could have done way, way better than this. if I didn't sell any on the way up and just got trail stopped out in like 3x up here. But you have to have that. And then you also have to have that exit plan. There's a lot of people who, Peloton is always a good example. There's a lot of people who are Peloton millionaires at some point, and now that realized much later, as it's down 97% from all time highs, that it's literally just an iPad strapped to a bicycle. So develop that plan now while SNDK looks good, and then stick to it come hell or high water, knowing that you will likely be wrong. And by wrong, I mean you're not going to hit the top. So I hope that helps. STI, not that one. That one. I marked this one up before, which makes me think that it was asked before. I don't like companies that when you scroll out, this was $500, which it wasn't. It would have de-SPAC'd at $10. I can tell it's a SPAC just anytime you see this weird little trail and then it starts trading, that means it was a SPAC. So this was $10 at some point, which means they had to do a number of reverse splits to stay listed. That's not good. You don't want to have to do that. You want to, make sure you're making sense and you're trading stocks that are healthy financially, which this one just cannot be in order to do this. However, short term wise, it's holding $10, and it seems last time it held 4, and then it ripped higher, so it's holding $10. So if I was looking at this as a pure technical side of things, and I just wanted to base a trade, just it to be a trade, I would just look at this and say it's holding 10, right? So if it holds 10, maybe you're in, maybe you stay in. If it holds 10, if it loses 10, you get out. And this is one of the premises I think that's so important about systematic trading is I think it's very important to boil your trading decisions and even your life into these very simple binary decisions where you're not like scrolling for the news to see is this a good company or a bad company or what's the whatever's happened. um the you're just, if it holds 10, great. If it doesn't hold 10, time to go. And then you just don't really think about it much more than that particular side of things. But keep in mind, it's a bad company, right? There's no way it's not a bad company if it does this one, right? You know, at least I guess to be very fair, it at very least was a bad company. I don't know, maybe they've done something now that's going to change them forever, and now it's the greatest company in the world. But I don't know if that's the bet I would take. WRD, We Ride. So this is a company that is right at all-time lows, and you can do a lot of reading if you're a reader, especially with some time off happening now. You can do a lot of reading, and you can find that it is way better to buy stocks at all-time highs than it is to buy stocks at all-time lows. So that's the first thing. It's got earnings yesterday, so it's obviously responding well. That's a good thing. Now, this blue line I have on here, this to me, if you're trading IPOs, becomes the simplest tool in your tool belt, I think. And huge shout out and all the props to Brian Shannon at Alpha Trends, who popularized the anchored view app indicator. Because what you're doing, what this line represents is, say you're someone who really liked this company, and the moment they went IPO'd, you started a dollar cost average. So every day you put a couple bucks, or every week you put a couple bucks into it. You are sitting roughly at this price right now, roughly at the same price that you're hanging out with, kind of right here and right now. And the there's a couple benefits there. The main one being sentiment, right? It's a great sentiment tool. Just saying, hey, the average person is sitting around $10. So that means if we get over $10, then great. It means the average person is making money in this company. If you're under this price, the average person is losing money, and that's not nearly as fun. So when I trade something like this, I just want to say, okay, if it gets above this, maybe I want to hold it, and then if it closes too far below it, it's time to go. You could see buying when it went above it. If it didn't gap, would have been great right here. And you can see some of these in some fig, right? If you had just avoided the thing, if it was under this AVWAP, then you would have stayed away from this. Core weave is another one, right? So originally it went all the way from 60 down to 30. So you'd have saved yourself 50% drawdown there. If you had bought it when it got back above this anchored VWAP and then held it till it started to close below and chop above, that would have been a huge move. That's 40 to 100. That's a crazy move. And now you'd be out it. And circle, I think, is the other one that this worked really well on. Yeah, so say you bought it when it was above this anchored VWAP, somewhere in the hundreds, and then you got out somewhere in the 180s, and then it round tripped all the way back down. And now, it might be years, but you'd be watching this line to come back down and come back up. And the reason I like this as opposed to any other just random squiggly line is because it makes sense to me. This is the average price of the company weighted for volume since its birth, which means if you're below it, a lot of people are mad. And if you're above it, a lot of people are loving life. And your job is to just figure that out. Are people happy or are people sad about it? Right? And that is going to be your sentiment guide. And then sentiment, in my opinion, moves price more so than anything else. Tune Studios is likely going bankrupt. Anytime I see a markup on a stock like this, my systems, again, I'm a systematic trader, I'm a quant. Um, the if I'm ever looking at a company like this, it's because one of you guys have asked, right? Again, I am a pure systematic trader in which my I back test things. I have data going back 25 years. It says take this action at this time, and it would never be into one of these because I'm trying to trade in trend direction with earnings growth, with companies that make money, all that kind of stuff. And I look at something like this, I say, okay, they've reverse splitted 1, 2, 3 times, and they're going to have to do it a fourth. This company is likely bankrupt. If you're just buying it because it's kind of at a low here, that's fine. Again, I would highly encourage people to read the literature of buying stocks making 52-week lows versus buying stocks making 52-week highs. I've written about it a fair amount on my Substack as well. It's a very easy test to run, and it turns out across time and space, you're better off buying companies in uptrends than you are buying companies in downtrends. And especially companies like this that are just getting absolutely murdered. So I expect this company to probably go bankrupt. Doesn't mean you can't trade. Doesn't mean it can't bounce from here to $2 or something and 4x your money. In the long run, I think you should really look at just buying companies that are in uptrends, right? And companies that go up are generally better than companies that go down. Simply put, right? That's why again I'm gonna always stick to the literature of things that I can prove, right? I can go and I can say here is a study, here is a back test, right? I think I have it saved here because I was just on another podcast. Do I? No, it's not there. Is it here? Yeah, it's here. Right. So this is more or less how I look at the market, right? This is an investment system that I have 25 years of data that I've back tested over of holding stocks that are in uptrends. Right. And then this is the drawdown chart of that system. Right. This is more or less how I look at the markets. Right. And these are my swing trading strategies. Right. That are looking to buy charts. Right. That are mean reversion and pullback trading and that kind of thing. I just had all these stored here because I was just on another podcast for here. But yeah, just again, buy stocks on the way up. I know I get the human inclination to think that just because you're at the bottom of the chart that it is a good deal or that it is oversold or whatever, you kind of want to spin your head around there. The It's just generally not how it's going to work in the long run at all. Right? You're going to stocks that go up are going to continue to go up. Stocks that go down continue to go down. I think Robinhood is probably one of the most classic examples of this. That trying to buy this one on the way down was absolutely brutal. And then if you just waited for the trend to reverse and it to start to make higher highs, not that there's any magic here, but it ends up making your life a lot simpler. And you just got to think, what is this, right? When we're looking at charts, it is basically a crowd psychology experiment, and all it is. As Robinhood's just tanking to new lows, I just remember so many news reports of who's going to buy Robinhood. Robinhood's a good buyout client, blah, blah, blah. And then as the company started to execute and started to make money and started to grow their base, you get into an uptrend. And what is the underlying thing that we're looking for in an uptrend? It just means the buyers are stepping in at a higher and higher price on every pullback. That's it. Right? All the fancy lines and everything aside, it means that, right, people thought a fair value was $8 here because that's where the price turned. Just objectively a true statement. The price turned at $8 because the crowd thought at $8 that was a good place to start buying. That's the only reason a price can go up. Buyers became more aggressive than sellers at that particular price. And then when it came back at $10, buyers became more aggressive than sellers at that price. And then at $16, buyers became more aggressive. And then at 23, and then at 37, and right up here at 95. Buyers are choosing these points to become very, very aggressive. That's what creates an uptrend. So, what creates a downtrend? People looking for any excuse to dump their stocks. So, every time a company spikes, sellers are becoming very aggressive. On every pop, sellers are becoming aggressive over and over and over again. And there's no buyers that there to counter them. And that creates a downtrend. And again, there's not a lot of things that we know for sure. One, we know that asset prices trend. You can look it up, right? It's a known thing. And if asset prices didn't trend, then none of us would be here doing anything ever, right? If efficient market hypothesis was true, and when there's a known piece of news, it's instantly priced into the stock, that wouldn't make any sense, and the markets would not move like they do. You can't look at a chart of gold and tell me that asset prices don't trend. So the question is, you need to um, figure out a way to trade the trend, and then abandon the trend when it stops being the trend. So the first thing that I could kind of give a lot of you guys, right, if I ride off into the sunset here, is not that there's like a magic head and shoulder, double, triple, quadruple, axle pattern that will make you a bunch of money. It's that asset prices trend. And our job is to identify the asset price at trending and then to participate in the asset price trending until the asset price stops trending. And that's it. That's the whole reason. And when the asset stops trending, we go through and put our money in another asset that is trending. Or if we cannot find any assets trending, we hang out in cash and we go to the beach and we sip pina coladas and have a good time. So when I look at a tune, that asset is trending. It's just, unless you're short, it's not the way you want it to trend. And then GameStop, problem with GameStop, right? This thing's been slowly trending down since its mania and since last mania too. And the problem with GameStop now is you're a treasury company, right? They decided to do the same kind of stuff that MicroStrategy's doing and all the rest. He's like, I want to just hold Bitcoin. So you're a crappy retail company that sells video game stuff in a world that you don't need to go to a store to buy video game stuff, right? I play some games. I've never been to a GameStop in the last 15 years. So the solution to that was to do some Bitcoin. And the problem with these Bitcoin treasuries is they're not doing too good either. Here's the king of the crypto treasury. So, right, you've got a dying retail side, and then you partner that with this new crypto treasury side of things that doesn't do well either, and you're essentially owning crappy, expensive Bitcoin. So, right, I know everyone got so excited when he started to buy Bitcoin, and the idea is why, like, just buy if you're excited about the premise of owning Bitcoin, you can just buy Bitcoin, and you can buy Bitcoin in a million different forms, right? You could buy another treasury company, or you could just buy an ETF, or you could move your money and buy some Bitcoin and move it off chain. You could do all kinds of things. So, eh, right, and the chart is reflecting that. Right? This thing is just now going to be lockstep with Bitcoin. You can see it's bouncing a little bit today because it sold off with Bitcoin, and now that Bitcoin is bouncing, it's bouncing a little bit there off the lows. So you're going to be lockstep with Bitcoin, probably a little worse overall than Bitcoin's going to be until the company goes to zero, or the dude does something with all the money he's raising back off of retail. He's raising a lot of money off of the back of retail, so just be very careful. I do not like being in companies that raise money off my back. AVNS. Probably not bankrupt anytime soon, but again, I won't beat the downtrend dead horse. But this thing's in a downtrend. If you want to play and guess that this is the low, right? You got some clean sport here, $10. You take a shot at 12 here. Your stop's below 10, and you pray you got the low. Better Home Financing Company, right? So this one's a little better. Haha, knock on wood. Or 150 to 1 reverse split. Ouch. Right? This one's in a range, right? So you can look at this and say, okay, this one's not as awful because it's not just tanking to new lows every day, but you're range bound here, right? You're just chopping around. Had a nice push here off of a recent earnings report, so they probably said something that was amazing, and now you're just kind of hanging out. Something tells me this is probably crypto. Is this a Bitcoin treasury? Is this just a crypto treasury now? I don't know. Looks like a crypto treasury just by looking at the price. Um, so if it's a crypto treasury, then you've got the whole crypto treasury thing, in which that is turning out not to be the best business in the world. And instead of doing your analysis on the crypto treasury, you have to do it on the crypto. So people who are trying to do like technical analysis on MSTR doesn't make a lot of sense to me. You can, right? But really all that matters. So if you're thinking MSCR is going to dig into this prior breakout area and go higher, that's fine. But you have to also at the same time believe that Bitcoin has bottomed and is going to move higher, and you cannot divorce those two things from yourself. You just can't do it. So if you're looking at a company and the premise of the company is that they're a crypto treasury, again, you just cannot divorce the aspect that you are invested in this crypto company. And if crypto has a bad time, if there's a prolonged crypto bear market, your company is also going to be in a bear market. And if crypto recovers and starts to push higher, your company will also recover and start to push higher. There's right. There's no ifs, ands, or buts or other ways that you could possibly deal with it. It's just the way of the world. It's just the way it's going to, just the way it's going to happen. So BBAI, the old Big Bear. Big Bear is just a range bound stock and has been for a long time. It needs something to kind of kick itself in the butt and get itself going. But we have ascending lows right here, which is a strong sign. But every time it gets up to $10, there's somebody there who is waiting to unload. And eventually you knock on that door enough times, it just takes one time to fail. Right? It only takes one time to go and hit on that door and them to go, nope, we're just selling all of the shares that we can possibly sell, and we are just moving on. And that can and likely will happen at some point, right? this again the point of trend lines to just continue the theme of today, which is demystifying, I guess, technical analysis, is you're just that whole buyers coming in at a higher price. So far, that pattern's intact. That looks great. Every time it dips, buyers are coming in at a higher and higher price. They meet a brick wall every time they hit 10. Who knows? Could be an institution, could be short sellers, could be any number of things that are just selling it every time it hits 10. But it is without a shadow of a doubt doing that and hitting that zone every time it hits 10. So your job is just to say, continue to buy it, I guess, as these higher lows are continuing. And the second the higher lows are not continuing, you have to be able to go, that's enough. It's no longer exhibiting the strength that it was before. I am out. See you later. And just kind of vanish off into the night. And that's the problem that I think most people have with some of these names is they get married to them. Right? They get super invested, they get a profit target in mind or something, and then they're no longer following price. This and to be honest, what this company is just a big speculative bet on AI. Big I think AI is going to be a good thing. Therefore, I'm going to invest in this guy. It's going to be a higher beta play on NVIDIA. If NVIDIA rockets to new high and becomes a $10 trillion company, this company will likely do fine. If the AI play starts to cool off, then this company is going to get killed. And that's just, you are tying your ship to that particular thing right there. So, all right. Again, you can ask your questions. We're getting close to the bottom of the list. If we do get to the bottom of the list, we'll call it a day there. But feel free to ask any more questions. KTOS, I think I still have some of this. Just FYI, I always want to disclose if I'm in it. Very, very small. And my premise for getting involved was just way back here. I think I got in somewhere in the 30s, and then I think I sold out most in the 50s. And then I think I still have a tiny bit left. I'm not sure, but I'll just give that disclosure anyway. I just want people to know when my analysis could be tainted on some holdings that I have. And for this one, solid breakout of $30, and it's in a great sector, which is if you do SHLD, is that it? Yeah. SHLD is an ETF. It's an interesting one. I always like to bring these weird thematic ETFs. This is a defense ETF, but it's a defense technology ETF. So it will take out anything that's just like a raw producer of guns or ammo, things like that, more boring, old school. And it's more about the higher end technology. You can see the insane trend of this thing since it launched. And and you can do ITA as well. This is your traditional defense sector, which broke out right here. I think this is when Trump said he was going to put $1 trillion plus into the military this year. I don't know if that's ever happened, but yeah, so nice little push up there. So this is one of those that it looks like a clean pullback and a strong trend. However, it's important to note that this thing in pretty much a straight line has gone from 10 all the way up to 120. So it's like 10x'd since December 22nd in a fairly straight line. Would not surprise me to see some profit takers coming in at some point as the year comes to an end. If you're looking at this and you're saying, holy smokes, this year alone, I've tripled or over doubled anyway. Might want to ring the register. That could cause some prolonged selling, but looks pretty okay. Earnings coming up in, oh, that's like February. Never mind. You can ignore that. But yeah, it's a great looking company. Could grind its way back to prior highs. I don't think it'd go all the way up here to 1,000, but up 160 or so. Some resistance here. All right, last one, guys. And if any more questions, again, let me know. If not, we'll tie it after Poor Kava. And I'll do the same thing here that I did with the other IPOs and just show, and I don't have it on here, so we'll see in real time what this looks like. There's this anchored view app. And again, if you're using TradingView, it's right here. Right? I forget, it's under this one. And then you just click on the candle you want to start from. This is the average price of the average market participants in Kava. And just like anything else, I look at this and I say, I'm not going to own this thing or even care about it unless it can reclaim this anchored view app from its IPO. This is the moment that it broke. If you bought it on the way through, that's at 47 and it rips through, and then eventually, right, as soon as it breaks at 80, it gets cut in half. So not really something that I look at a company like this and I say it's broken. It's probably way overhyped at 183. Maybe it's a little bit undervalued at 40. I don't know. But yeah, I kind of implore you, look at these IPO anchored view apps, because I know there is a massive industry and it's important to keep them in mind that hype IPOs, and that is their entire job, is to go on CNBC, to go on all these places and talk about how their IPO is the most amazing thing in the world. And remember what IPOs are. They are exit liquidity for investors. An early investors in Kava is using the IPO to get out of their position. Undeniable, right? One for one, has to be the way it works. It's the way to get exit liquidity. So this is why I'm very careful about them. The other thing, last stat I'll give, is 80% of IPOs undercut their IPO price. I believe in the first year. I'd have to look up the stat to be sure, but 80%. So if you're buying an IPO, it's an 80% chance it's going lower than its IPO price. You can see this one already did. Again, buying it back through that IPO price. That's a super interesting trade. That to me is much more interesting than trading it after the fact. So I would just set an alert for this line. I know it's at 80, so it's a huge percentage gain from there. And as long as it's below 80, not interested. If it can get back above 80, there I would be a little bit more interested there. So all right, guys, we're going to be ending it a little bit early, but got through all of the ticker talk for today. I appreciate everyone for coming by, as always. Uh, if you want to know more about me, you can go to statsedtrading.com. You can just Google Michael Nauss CMT on all the places there. And thanks for coming by.